Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys are having an absolutely amazing day. We are about to get rolling on our Monday evening edition, our Monday morning edition, excuse me, as we had our big game Sunday. I think that's what you got to call it now, right? It's the big game when you don't have all the right words. So I want to welcome you all in. We're going to do what we do each and every day, looking at from an educational perspective, the best opportunities for today's trades. So if you're new to the channel, do me a favor, click the subscribe button, hit the notification bell, hit the thumbs up icon. It means a lot. I would appreciate it. And then leave a comment down below. What did you trade last night? Did you take advantage of the Sunday night trade room? I'd love to hear that. If you traded last night during the big game, that'd be great to hear. So let's go ahead and put that in the comment section down below, and we'll go ahead and get started. So let me go ahead and shrink my head here, and let's dive in. So when I'm looking at the S&P today, it looks to me like we've got some sort of a bullish movement. Now, last night we talked about a potential gap and go trade, and we did get a little bit of the gap and go move. We've still not come below the first candle's low, and so technically still going up, but it really kind of died off a little bit. Our gap and go kind of died off just a little bit, not as much movement as we normally would like to see in our gap and go, and it didn't give us a huge run, just I'll call it a wee bit of a run, right? On this move. And so when we were looking at it last night, we were looking at it right about here, and we really only got one candle that was a bit higher. Before then, we saw some weakness come in. Now, it's not really gone anywhere, but that's actually okay, because that's really how you get a better setup for a breakout trade above an all-time high. So if we get some basing in there, look for that for today. Now, we did talk about a little bit of a wick over wick level where we may see a reversal today, and that level is still very much in play. NASDAQ, same kind of picture, where the NASDAQ actually is a better setup for a breakout above those highs if we get some basing inside of there, so that you don't feel like you're being forced to chase a position. You can take the trade as it comes to you. You do have a little bit of a retest area down here at 13,503 by 13,485. So right around that 13.5. Nice whole round number area, wick over wick level, where we could see a bit of a retest. It came close to it Friday during the day, but did not touch, and then moved away at that point as well. And then we have the Russell. So the Russell, we also had a good pullback area after a potential on the gap and go play, but we did not come all the way back to it. It was, as Bob Uecker would say in the movie Major League, just a bit outside, as it just missed our level here by, I don't know, a point. And so by missing it by just a point, I need to switch it to a confirmation entry. Level's still valid, but it's got to switch to confirmation. And then like all the other markets, if we get basing, you still have a breakout above here. So when we're at an all-time high, the thing we've got to remember is what we don't have, the number one thing that I would say that we do not have is a short opportunity. There's no reason for me to be trying to look for where's the best place that I can get short these markets, because that to me is how you get yourself into some hot water. So for what I'm going to state now is what I always state. Don't tug on Superman's cape, don't spit into the wind, and don't short the all-time high. And so when I'm looking at these, I'm going to stay to long positions on pullbacks. Now, was I talking about the slowing momentum that we had in the daily charts? Absolutely I was. And I was also talking about the fact that typically February is a bearish month. Over the last few years, we've seen February be pretty bearish. I mean, no doubt. But the market didn't listen to that. I mean, we had a little bit of a sell-off here for a couple of days, and the market just never followed through on the slowing of the momentum. Matter of fact, we've gotten a nice big rally higher. The one thing that I always look at when I've got something like that is I will take a look at our volume. And what I am noticing, and ignore the volume up top, that's volume profile, but what I am noticing is that on the way up, we are decreasing a bit in volume. Now, we're decreasing a bit in volume, but um, we're still doing okay uh, relative to where we had been. It's not like it's volumes falling off a cliff, but it is as we rally higher, we are seeing volume get lower and lower and lower. And so that is a little bit of a cause for concern in that we're not seeing an increase in volume as prices are rising up. Usually you'd want to see volume kind of extending as prices going higher. You'd want to see volume staying level at the very least. But that's not uncommon, right? I mean, that's not an uncommon thing. But look at our last big rally up where we had this big rally up right here. We saw that volume stayed high. In fact, a matter of fact, went even higher. And so that's a little bit more telling and a little bit more concerning that we see this. Now, does it mean that we're going to come hammering down? Absolutely not. Matter of fact, I have absolutely no clue if price is going to come hammering down. I'm just gonna, and I say this, if I say it once, I say it 1,000 times. I'm going to trade what the chart gives me. And if the chart's given me a good opportunity to short the market, I'll short it. Right now, it's not. Right now, it's saying, listen, you should probably take your longs and hug them and kiss them and squeeze them and love them because those are your best trade opportunities. All right, so let me go ahead and share this grid. Any questions on equities? If you got a question, do me a favor, type it in the chat window so that I know. And thank you, by the way, for those of you that said good morning, so at least I know that people are listening. All right, let's share this grid. All right, next, let's move over to commodities. Not that one. Energies and metals. All right, so in looking at this, we've got the crude oil levels. Now, the crude oil is sitting below, frankly, what is a pretty good level of supply. This is a level of supply formed a long time ago, but it's a good level from a structural standpoint. Problem is that we're getting the kiss of death in front of that said good level. And so kiss of death in front of the good level makes the good level not such a good level, and so we were going to take that level completely off the chart. Say that 10 times fast. Now, I think you still have an opportunity for a breakout above the high, but your stop would be fairly tight as we are just getting a bit of basing in here. I still like the pullback a bit better, and your pullback would be this wick over wick here above a pivot low, which is usually a pretty good area. Now, it's on a Friday afternoon, and Friday afternoons are not always going to be our best times. So, that would be a decent reversal point for price to come back in if we do come back into that region. Let's see, Billy, is the YM breakout still in play? Let's go take a look at that YM breakout. I typically don't go too deep into the YM. So yeah, the YM breakout, if you got into that one last night, it just 6 candles stalled you out, right? So 15-minute chart would tell us that if we got into it, our stop would be below here. Because remember, if you recall, Billy, we looked at it on a 15-minute. And so your 15-minute chart is here, breakout. That's candle number 1, 2, 3, 4, 5, 6, right? So you did get 6 candles, and then after 6 candles, it had gone nowhere, telling you, okay, take your stop, move it to break even. If you didn't take it to break even, there's your risk, right? That distance is your risk. Here's a 1-to-1 reward to risk. Here's a 2-to-1 reward to risk. So even if you didn't move it to break even, it did give you greater than a 2-to-1 reward to risk, telling you to take some money off the table. So is the breakout still in play? The breakout, technically, you should have either A, taken money off the table, or B, moved your stop to break even, and in that case, you'd have been stopped out in the overnight hours, right, because of the six candle rule. Can it still go? Yes, it can still run. I still think that we're overall a bit more net bullish. But remember, this is the weakest of our 4 markets. So I think if you're going to get long, I think that the other 3 markets are probably all better candidates. Okay, so you set a lower stop. You've moved your stop to break even. Okay. Yeah, move it to break even and just stay in the position. There's no reason. If you've moved your stop to break even, Billy, there's no reason to get out of the trade, right? At this point, get out of the trade once you've seen, set a price target and stay in it until we get there. All right, yeah, because if you set a lower stop, then you probably didn't get a 2-to-1 reward to risk. All right. Gold last night. Now I will say that gold, we looked at we looked at this 15-minute level up, or 60-minute level right here. We've traded into it here in the last little bit, and the markets haven't gone anywhere outside of that level. So we just met entry right here, and technically our 4-hour trend is down, so that's a limit entry opportunity. And so if you're in the trade, you are 3 candles into it. Your target, however, has to be right about here because that's your opposing demand area, right? That's your first target where you would move your stop to break even. And so if you're not in it, I don't know that I would get in it until I get a candle with a lower low. At this point, we've traded more than halfway through it, so I'm going to take it off my charts. Not make it longer. Okay. Your next supply level is this area up here. Now, if the supply level that we're in fails, you're still in a downtrend. No sound. I don't know. Can everybody else hear me? Do me a favor. Type in the chat window if you can hear me. If that fails, you're still in an area of in a downtrend overall. And that downtrend wouldn't be broken until we get above here. So if we get above here, okay, thanks, Billy. If we get above here, then your downtrend will be broken, but hasn't happened as of yet. So we're still looking at a supply level above us, even if the one that we're currently in doesn't hold. Now remember, thank you for that, everybody. Clear across the Atlantic. John, you're the man. Remember, if that supply level fails, which it's okay if it does, what happens if the next one fails? Well, now we're out of our downtrend. When we are trend following, here's the thing to remember, is that in a world of trend following, I want to be like the movie guy. When we're following trends, when we're trend following, if we have price that's moving up like this, right? Our goal is to get in on the impulsive moves, right? We're going to get in on the impulsive moves, and we're going to have a chance to get back in on corrective moves, right? Impulsive moves are the ones that are heading up. Corrective moves are the ones that are heading back down. So our goal is to get back in on the corrective moves. Well, in the context of our downtrend, our impulsive moves are down, our corrective moves are up. And we believe that those corrective moves will be shorter amount of time, that they won't last as long, and that when they hit a smaller time frame supply, they'll reverse and come back down. Well, if those corrective moves start to break through, now what do we have? Well, we've got the start of a new uptrend. Okay? And so that start of a new uptrend then allows me to ride the next one. But that means that in order to truly follow trend effectively, I'm going to take small losses in areas like this and in areas like this. That's the thing to remember, is that when you're truly trend following, you anticipate small losses at those levels. It's just part of the game, right? And I'm okay with those losses because those losses keep me in longer running trends better. And what it allows me to do is to realize quickly when I'm wrong. Does that make sense to everybody? I hope that makes sense, because that is, I think, a very key pivotal point of trading in this style, is that you've got to be okay taking some small losses at some of these turning points. Now, I will say that I do still like the big picture turning points for areas of opportunity, but I'm not, I I know it's sexy to say, hey, look, we caught the absolute high and the absolute low every single day. And that do we have those days? Hell yeah, we do. But when you're catching the big picture trend, if you're following the big picture trend and you want to make good money, which is going to be much better, then you're going to have to be okay getting stopped out on some of those trend change directions. All right, I'm off my soapbox. Now, I don't really have a whole lot to add in natural gas or in copper, and I'm running out of time today, so I'm not going to dive into those ones at the moment. Ags last night, there was nothing to talk about, and there's nothing to talk about today. I don't really have anything else to add on my ags or my commodity positions. So, Peter, where are you putting the stop on the current GC position? It has to be above. Oops. Has to be above the. Let me bring these back in. Let's see if it'll let me bring it back. All right. No, it's not. So on the GC position, our level is this area here. Your stop has to be above the pivot, which is right there. So it's okay if it's just above the pivot. So 1829 if you're in it. Now, if you're not in it and you're talking about this one up here, then on that case, I would say that your stop should go at the tightest at 1839. Would be at the tightest place your stop could go. Realistically, you'd want to be up above 1843, but 1839 is where you would want to go. All right, looking here, like I said, at the ags, I am a little bit intrigued by wheat. A little bit of potential breakout, I think, above here, but then I don't have a lot of great room to roam. And so, like I said, I don't see a whole lot in the ags at the moment that's telling me I really need to get in. The breakout above bean oil, I think, is there, above 45.58, where we have this line drawn. Other than that, I don't have a whole lot in the agriculturals. There's just not a lot there for me to get after. And I forgot to do the other grid. Let me bring the other grid back up. Not hit the on-demand button. Ugh, that on-demand button is always, like I said, it's in the worst possible location. I hit it at least once a class. All right. Next, let's move over to bonds and currencies. And we looked at them a little bit last night. Talked about a potential breakdown here below the 10-year. And we did get some decent basing here. If you were in the overnight hours, you didn't really get a true follow-through. I still think the better trade is that it's going to come down. We're just kind of waiting on price to give us a good, solid breakthrough. It just hasn't happened yet. I think it still very well may. And so, if you want to take it, we actually just put in a bit of a tweezer top right here. If this candle stays, if this candle doesn't put in anything higher than this upper wick, then we're going to have a tweezer top, and that's actually a pretty good strong entry signal as well. ZB, which is our 30-year trend, is continuing to go down. We bounced off of this area of support. That broke, but then 6 candles later, it's gone nowhere. I still think it's better probabilities to go down. So if you're still in it, I think it's okay to stay in it. I would just move your stop now above here, above this green candle, just in case you get a quick whipsaw to take you out. In the euro, so our euro position, we had looked at this last night to say, well, if we get quality basing in front of here, I think it's going to break through our supply zone because we're forming a bit of a base. It looks like we could be forming a bit of a base down here. Especially on the hourly chart, it's a lot easier to see. A little bit of a base could be forming. If we don't get basing and price just shoots up, then I think your supply zone is going to hold and you're going to see price come back down. Well, the good news for us is that we got neither last night, but I think both are still in play. I'm a little cautious about taking a long down here because our overall big picture trend is still down. So if you decide you want to take a long on one of these levels, make sure that it's a confirmation, because it's tempting to take a long on one of these positions. As we had a nice run up on Friday, you might want to take this area here as a long, this unbalanced wick over wick with your stop below the pivot. I could certainly see the allure of that trade, especially at a whole round number there at 1.2. But it is counter trend, so just keep that in mind as you look at that position. And then the Canadian dollar, same thing I keep talking about. No need to trade the Canadian dollar inside of the current range. The current range is fairly tight. Looking at it on a daily chart, that's very easy to see, and it's not really telling us that we should be. Do not mess with the Canadian dollar. Don't do it. Just you don't want to do it. All right, let me share that out. Now, I've had a couple of people in the last couple of days ask me if I would show some currency positions. I don't mind. If you guys have a currency pair you want me to look at, just type it in the chat box, and I will gladly take a look at an individual currency pair, because we're not getting a lot with currency futures right now. New Zealand dollar has been garbage. The Japanese yen has been bearish, but the Canadian dollar and the pound have been very sideways. And for the most part, too, so is the Aussie. Now, remember, all of our currency futures are traded against the U.S. dollar. So if you've got currency cross pairs like the euro yen or the pound yen or something you want to look at, certainly let me know. I got a few minutes today. We can take a quick gander at them. But in reality, I mean, let's go to the daily. That tells you all you need to know, right? I mean, that daily is really, really sideways. And I don't normally use the daily. I just showed you that as an illustration so that you could see it very clearly. Which is why in the 1 hour, I'm just not interested in any of these areas, these areas of supply or demand. We're actually in a narrower range inside of the bigger range. And so I'm just going to hold off on the New Zealand dollar for a little bit. Somebody said last night, they're like, that would make a great iron condor. And it would in the world of stock. The problem is that in the futures market, with this one's not the highest of liquidity when it comes to the options that are available, and your spreads are not going to look so clean. Great British Pound, we had a really, really nice tweezer top set up here right at the open. So those of you that were awake at the open, this tweezer top did give you a pretty decent setup here. That's kind of what I'm looking at that's what we looked at in the ZN this morning. It is forming. Tweezer tops are only good if you see that move kind of continue to run down. But what about a retest? Well, on the retest, I'm just going to take the actual tweezer top itself as a potential on the retest. We do still have our demand area down here because we anticipate that most speed candles eventually get retraced. And if this gets retraced, that would be the origin of that move. The wick over wick here, I've got two wick over wicks, one on top of the other, which I'm not taking either one in that instance. I think that they could be, that kind of weakens it. So that's why I have the pivot up here as selection. Japanese yen, we're still bearish on the yen, although we talked about the fact that if you get basing here, because you're putting in a little bit of a bottom here, a little bit of basing here, you might get a counter trend trade up to this area of supply, but then we're more likely to look for the next short. We've been riding this thing short ever since, I think we were riding it short. Some people may still be in the short from when we looked at our ascending triangle here after a move down. That was really the best setup, and it's been down ever since. We've come nowhere near that. Those of you that are more swing trade style, that's really where you make a lot more money, is if you're more swing trade style and allow those things to run, but you got to be comfortable around the risk. Amit, I will take a look at those in just a moment. Let me get through the Aussie here real quick. In the Aussie, we talked last night about this little bit of basing that we had in here, and that you could theoretically get short below there if you wanted to try to take a bit of a run. And we broke below it in the evening or in the overnight of the U.S. We have not done anything really since then. And so if you're still in it, your stop should be above that tweezer top. If you're not in it, then you might want to wait until we get a lower low. Because overall, if I look at the 4 hour, our 4 hour trend is technically still down, although showing a bit of strength. Suggested that the Aussie yen usually mirrors the S&P. Well, I don't really look at the Aussie yen very often, but let's pull it up. And what's great is I can throw a comparison up here. Do I have that as an indicator? Yes. It actually does. Looks a lot like the S&P. So if I put up the SPX, you will see that the SPX and the Aussie yen have been running very close to one another. I wouldn't say that one is a leading indicator over the other, although it looks like the S&P has outperformed it as of late. And so, yeah, it kind of mirrors it. I frankly have never looked at that correlation. And because it mirrors it, I don't know how exactly I would use it. Right? I'm not exactly sure how I would use that correlation. I actually prefer an inverse correlation a bit better, but it could be used as a way to confirm some of those zones. Maybe use it as an additional level of confirmation in some of those positions. All right, so looking at the Aussie yen on the 1 hour, certainly we're in an uptrend. Well, we've just broken above that high, so I would think that bullishness is probably the better way to go. And then you're looking at the 1 hour long zone at 80.38. So that would be this area right here. Yeah, I mean, I think that that's an opportunity. I'm actually a little bit concerned that the fact that there's a couple of supply levels down there. Oh, that's a good point, John. Yeah, a good inexpensive way to trade the S&P. That's actually a good point to think about. This I think right here, this little rally-based rally. Now, the thing I like about this, and nice find on that, is that it is a prior area of resistance. And by being a prior area of resistance, we would consider that a fair price value area, an area where the market in the past has acted as resistance for a while, right? And so by acting as resistance there for so long, it does become a valid kind of reversal point. I will tell you, my eyes immediately go to this here is actually the better level of demand. That, to me, is the best level of demand on the whole chart because you've got a little rally-based rally above a pivot low, in which caused price to get a new high. This one here is not quite as clean, but certainly still valid. Stop at 80. Okay, so so it's more of a swing trade that you're looking at on that one, Amit. All right, and then let's look at the Aussie Swissy. One hour opportunity at 69.13. Would prefer a pullback at 68.81. A 1 hour breakout at 69.13. Got it. Okay, I was like, that doesn't look. Learn to read there, Fulkerson. 68.81. I'm going to go to a smaller time period here. Right there. So on this case, I actually prefer the breakout a bit better than the reversal. The reversal's pretty good, but if your reversal level is this one here, which I think it probably is, I think it's okay, but the fact that we gave it an immediate retest is a little bit disheartening because we rallied and then we immediately retested, and so it would be a little bit weaker than what I would like. If we got now, you still need, I would actually prefer price action to do something more like this, where we get a little bit, one more pull away from here, maybe down to this region, and then you get basing. That would be the ideal setup, right? To me, that would be the ideal setup. Now, why would that be the ideal setup? Because by pulling away from there one more time, it will remove any more of those sell orders that are stopping price from going higher. You know, the analogy that I use, it's like shoveling snow, right? We've got to shovel the snow out of the way before we can move freely. And the more times that it hits that area, the more snow it's going to pull off of the sidewalk to allow us to freely freely move to our next location. Does that make sense? All right. So hopefully you guys get something out of that one, and that one makes sense to you. As far as today goes, and let me share this grid here real quick. Like I said, I don't see a whole lot of great trades and opportunities out there for today from a currencies and commodities standpoint. I think that our bullishness is going to remain in the equities, but remember that we will stay bullish until we won't. We're going to go up until we don't. The sun will shine until it doesn't. It will rain until it stops. And so my point is that let's not get so caught up in what we think is going to happen in the markets, and let's trade what the charts tell us. If we trade what the charts tell us, we're going to be much better off. I'm going to make a quick announcement. Starting on March the 1st, we're going to have a slight change in the daily market commentary and in our live trade room schedule, so you will see more about that soon. And we are doing a little bit of an expansion of our live trade rooms on the site, as well as changing the format a little bit of the daily market commentary. So that's more news is coming on that. I hope, from what I gathered, everybody seemed to really liked it, and I'm a big fan of getting everybody's feedback. And the feedback I got the first time I presented it was excellent. So that's all I have for today. I hope you guys all have an amazing day. I appreciate you all joining me. Thanks so much, and I'll talk.